we've been badly hit in terms of the investment position. And when the volatility goes through the roof and something which is not comparable to other historical moves, you better be on the sides and do nothing. So what we are doing, we've taken the hit. Now we are sitting out and waiting for our times to come back. So it is, the favorite pastime is I have twin boys. So I take care of them. That is the first thing, because there is no other way out. And second is going back to the same old Netflix, Amazon, and a lot of series which were left pending. So it's either the kids or the iPad. We are trying to do a lot of fundamental analysis on how cheap the companies are. Second is we are trying to do a lot of broader-based market analysis as to how bad the current markets are. And whenever those broader market parameters start improving. So for example, one of the data points which we look at is out of all the listed stocks on NSE, how many stocks are down more than 50%? So today we are down almost 79 to 80% of the stocks are down more than 50%. This last happened only in 2008. So that was closer to 87% of the stocks which are down more than 50%. A lot of broader markets have been done, so we are just finding out spots where we would like to act only when the trend changes. What we would look out for is, say, once the volatility indices are down, markets have stopped being very crazily volatile. So, say, if I reflect back to the times when we were in 2008, so after October 2008, for the next 6 months we did nothing, almost up till March. And even if you did, it would be 10-20% of the size of the trade which you would do. And then you wait out for the times by April when the market started making new highs or crossing the recent highs. That is the time you know, okay, the trend has changed. And also the reason why do we wait is because there is, on the downside, there is panic selling, there is margin selling, which aggravates the position. But when you want to re-enter, there is never going to be a margin buying scenario. So even if you're late, it will be very early in terms of the trade. So people don't go mad buying into the stock because there is no margin broker buying it. So we'll get our times on those sides. So we may maybe buy 20% higher on stock, but we'll get there. Fundamentals tell you what the business is doing. But prices are not decided by the business owner. And the marginal seller decides the prices. And also there will never be great discovery in Indian markets in microcaps. Because there is no case where a company is too cheap. Nobody can take it over. So, for example, if the promoter had only 20% shareholding, there would be one white knight who will say, boss, I'll take, even if the company is 1/3 cash, I might just buy the company 50% higher and double my money by selling off the company. So, what happens is, overall fundamentals are something which end up being a reason for you to buy, but they start working only in a bull market. Because that is where people have the liquidity to buy the stocks and give it the right value. So it's not the fundamentals are not working, businesses are working when the fundamentals are working. Price is something which happens later.